Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 10th of July, 2018. It's 9:01 Eastern U.S. time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're looking at a continuation of the risk-on sentiment. The leader today is crude oil. Crude oil has been an interesting product to watch. The open had a nice rip up of approximately 50 cents or so. It has been popping and dropping throughout the session, the overnight session, with a completely balanced profile in crude. Very interesting product. It's basically my go-to product now, although I don't recommend it for everyone because when it moves hard. In the indices, the leader this morning is the DAX, up 45 points, followed by the Dow up 58 points. The S&P this morning is up 3.25 points, but the S&P has extended all the way up to 27.97.75. 27.97.75. Key area was 27.96.75. So pushed through the ledge there by about 4 ticks. The laggards this morning: gold, the Japanese yen, the euro, the bund, the U.S. bond, and the 10-year note, which tells us that allocation again is to risk by the market. The buyers have it yet again. So that's where we stand as far as what could interrupt our auction this morning. Now, there are a lot of economic releases from the UK, trade balance, index of services, construction output, manufacturing production, and also the zoo survey expectation out of Germany. But looking at today's calendar, just not seeing too much on deck for today. We have the JOLTS job openings, which is not a mover for May. And then other than that, we have ECB speaker Lautenschlager at 1 p.m. So it really not much to interrupt us. The ES is going to have to move under its own power, just like it did yesterday. Let's take a quick switch over and look at what we expected yesterday versus what we got. Here we go. This is yesterday's Trader Bite results. Scenarios. Scenario 1 was expected to be an open auction that drifts down, pushes into 27.80, and then holds steady. We did get that. However, after it got to 27.80, 27.79 really, that's the key LVN in the area, MCLVN. It pushed down to the opening swing low, and it ended up drifting all the way back up to 27.87. So a lot more bullish, bullish than than indicated here. Scenario 2 didn't play out at all. As I showed here on scenario 1 with this box, we're very likely to leave a gap zone open, and we did. We left a gap zone from 27.72.75 down to 27.66.25. That's a 26 tick gap, 26 ticks being left behind. They're on today's stock flex master levels if you get those. So here we are. This is what we saw yesterday. This is the gap. So we got an immediate push. We got an open auction sideways for just a little bit, and then we walk ourselves right up to that MC low volume node, the key low volume node in the area, and then we start to drift down. We took out the opening swing low by a tick, and then this is where the push took place. And where do we pull back to? We pulled right back to 27.79, which is now the initial balance. So we have a range extension up, a pullback a very orderly pullback to 27.79. The fact that we respected 27.79 on the way up is a clue in. That intermediate time frame traders are active and are responding to their time frame levels, which is what an MC is. But then later we respect this 27.79, which clues us into the fact that intermediate's still active, but also short-term traders are active. And then we continue to extend up. We end up right back at the 27.87.75 stock zone. That's basically the high of the day is the stock zone 27.87.75. A double distribution profile with a clear key low volume node at 27.79 even. That's what we left with. Again, this is more of a normal variation type of day. I don't consider this a trend day. There was a lot less activity yesterday than there was Friday. As you can see, the entire day fits on one screen with this bar width. As I mentioned it in my recap notes on convergent trading, it seemed to chop around a fair amount. However, you look at how it closed. Here's the point of control, the most traded price of the session, right at the high with a weak high. With that being the case, then we are likely to see it pushing up in the extended hours, which is what we did. And so we extended to 27.97.75, I think. Let me see. 97.75. Yes, I'm not senile yet. Old, but not senile. So what we end up with is another day where the market gaps and runs. And so that forces us to take a look at what the market's doing in a bigger picture. Again, we're back to our composite chart. Instead of bars, I'm using the RTX volume bars to see the profile within the composite. I like that feature. But here's Friday. Friday takes us from this lower distribution down here, takes us into the June 2nd to the 22nd distribution. Okay. And so is that date correct? June 4th to the 22nd distribution. And what that means is we are likely to test. So here yesterday we pushed through this low volume node. There's your 27.79. That's the 27.79 right there. This low volume node on the composite, which then is likely to take us to 27.88.25. And then if 27.88.25 does not present resistance, 27.96 goes, and we start to move right through to the next higher area. Now, let me squish this down quite a bit so we can see what the heck is going on. And you can see where we're headed. 28.11 was the last peak in the area before 27.96. And then we enter this little gap zone right up here at 28.20 down to 28.16 or so. And that would be next. So first at 2,800. Well, first 27.96, 2,800, 28.11, then 28.14, I believe. Let's see what this price is. So what is this price? About 27.16 and so on. And we end up in this gap zone up here. That gap zone actually should show up in the flex levels up here somewhere. There it is. That's it. Okay. So 28.16.5. So we're working our way through these areas, and there's quite a bit to push through. You can see these stock zones stacking up in this area leading up to 2,800. Now, what does that mean for us for today? What do we do today? Well, first, we got to take a look at the overnight session and what we have there. Overnight. There's the reopen a mild test down to the point of control, yesterday's point of control, and then up off to the races. Now, there were a lot of headlines on China yesterday. China. All right, buddy. So if we look through, you'll notice that these cyan kind of bright blue colored headlines are all China. And yesterday there was just quite a bit coming through last night. Here it is, this stuff here. CPI, PPI, and some releases from China to fight back against tariffs from the U.S., support expenditure of $20 billion, some tax breaks, all kinds of goodies. And that leads us into this rip up here. And then the market just basically settles down right in the middle. The European session had a downward impact on prices, but overall we've moved. We're in balance, and we've shifted. The point of control up to 27.9150, and we're holding beneath it. So what am I expecting today? That's the bottom line. What I'm expecting today, statistically speaking, I'm expecting a balanced day. So even though we're opening in a gap up, I'm expecting a very balanced profile and a strong potential for a push down and for the market to rebalance. It is rare that we end up with a trend, a gap zone, another gap zone, and a trend up. It is very rare. Now, that does not mean it doesn't happen. It doesn't mean bet your house on it. It's just the way things have played out in the past. I'm looking at about 2,500 days of data. There just aren't enough samples of this to have a high confidence play on it. But most likely, we have an open auction that is likely to try to drift up, and then I'm looking for an impulse down. I'm looking for this to re-enter the prior day's range, and then to balance out either in the 2790 area, or to balance out somewhere in the middle. So overall today, I'm looking for what looks like a fairly evenly balanced profile, something like that. That would be my guess. Again, this is a guess. That would be scenario 1. The same idea applies to scenario 2, except scenario 2 is responsive immediately. Open auction, response, comes down to the prior day's high, gets an impulse, trades in the middle, and then eventually starts to drift down into the range. And what I'm looking for here in either case, scenario 1, scenario 2, I'm looking to sell in the 27.94 through 27.9650 area. Those two stock zones, these stock zones here, this double area here is going to very, very likely be an area where I build into a position short back into the range. I'm expecting this back in the range is what I'm getting at. And that's scenario 2. Now, does that mean that you should sell on the open and just sit pretty? It does not. I'm still using order flow, and I'm still reading. I don't put my orders just out there sitting and waiting for the market to lift them and run through them. I'm still looking at how the market's responding. Are buyers getting a lot back for their effort this morning? If we look at the volume scope chart, so we have not opened yet, but we had a nice push up at 345 to 416 or so. We had a nice push up right there. 2018 contracts traded on this push up. Then we had a continuation that was slightly weaker. So we pushed, pull, push, and now we went corrective. Once we got below this area here, you could see there was a lot of buying imbalance at this price at the 27.94. That's the area I'm seeking to I'm seeking to sell, it rolled over, and since then we've got this big seller participation in the Globex before the open. Now that all changes, of course, once we open up. We'll see how things play out, but this area, as I mentioned, these two areas here are going to be areas where I'm going to look to aggressively sell for a rotation back into the prior day's range, into 27.87.75 at least. That's the key play of the day, and that plays into scenario 1 and 2. I'll let you guys figure out 3 and 4 for yourselves. I'm just providing a guideline here. As always, I hope you're getting something out of these trader bites, and I'm impacting the way you're seeing the market. The market is a narrative. It's a story. It's a story every day combined with some probability and statistics, and that gives us the strong hand to be able to come in here and do something on a day-to-day basis. So that's the point of this trader bite. Prepare, execute, manage a trade again and again and again, rinse and repeat every day. Okay, Convergent Traders, we have our first trader intervention today, and that's at noon. So noon Central, 1 Eastern. If you did not see the invite, look in the notices board and in your email. Good luck today, everybody. Take care.